We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more. We're going to win more.
Evolution AB, ticker symbol EVO, is up 6.6% in the European session after it reported its earnings. And we're going to talk about it. This is a stock I own in my portfolio. I have exposure. Really great to see this. So we're going to talk about why the stock is up. Is Evolution a buy right now? And could this signal the bottom before we see massive gains in the future? Let's talk about it. But before we do that, if you could please go ahead, like and subscribe. It really helps a small channel like mine out. Let's dive in. Now, for those of you that don't know, for those of you that are new, you don't know what Evolution does, they are a leading provider of business-to-business, B2B, online casino solutions. They specialize in live casino games. They develop, produce, market, and license these solutions to online gaming operators. Evolution is what we call a gaming supplier. In essence, they provide the picks and shovels for the online casino industry, offering the technology and infrastructure that powers live casino games for other companies. So to a company like Stake or DraftKings, they will sell this feed right here where they literally have a real person with a real table, and then you can bet digitally online from your phone, from your desktop, from your iPad, wherever. They have a whole range of games, blackjack, baccarat. They have live casino game shows, really interactive stuff, and it is a great business model. Now, revenues actually grew 3%, beating the expectation. 524 million versus 517 million. That was a beat. Revenue grew 3.1% year over year. EPS missed expectation ever so slightly. The street wanted $1.24 or €1.24. The market reported $1.22. However, this largely had to do with currency fluctuation, because if you go ahead and look at the CEO's comments, they said revenue growth at constant currency is estimated to be 8.8%. So if you adjust for constant currency, without a question of a doubt, you probably smash those estimates. Looking at the quarter as a whole, gross margins did not decline. They sit at 100%. Yes, this business has no cost of goods sold. It's actually kind of crazy. Net income margins did decline, but that is to be expected when you have a 52% net income margin, and they are going through some operational challenges. EBITDA margin also declined, as you can see right here, from 68 to 65%. The nominal net income figure did fall from 317 to 294 million, but EBITDA was largely flat year over year or from the same quarter last year. The company currently has $550 million in cash, $94 million in debt, an absolutely fantastic balance sheet, guys. But with this very mixed earnings in terms of margins declining, net income declining, why was the stock up 6.6%? And it largely had to do with some of the CEO's comments. Let's go ahead and read some of that. So as I showed you before, revenue growth at constant currency was 8.8%. That was one reason. Another reason is because Evolution has had this constant issue with Asia, cybersecurity issues, cybercrime, and the hijacking of their video streams. The CEO came out and said they are starting to reap some benefits from the measures that they are implementing. The revenue for the region is back to growth, and they remain cautiously optimistic for the remainder of 2025. So that could be a signal that the bottom may be in for the Asia segment. And from here, we saw year over year and sequential growth. We can actually see that improve throughout 2025 into 2026. Now, do be aware, this is coming off some relatively softer comps, but the management team remain fully committed to ensuring to receive the payment for their innovations and dedication to providing the groundbreaking games to their market. In Europe, they did see revenue decline significantly, especially on a sequential basis. And that's because they're dealing with quite a lot of regulatory issues in the UK. We'll talk about that a little bit later. However, North American momentum remains very good. And when we look at North America and their values, I'll show you why that is. Exceptional growth in the North America. And that's part of the thesis for owning the stock. The company also announced on their earnings that they opened their new studio in Sao Paulo. That actually opened today. So on the release of their earnings, that opened, which means the Brazilian market now just got a whole lot more accessible for Evolution. The market loves to see that. You're literally just increasing your TAM when you open a studio in a new country. And then for the quarter, even though RNG revenues did disappoint, only growing 0.3%, that is because it was affected by one of the largest payouts ever for RNG. And that's just the issue with gambling stocks. That edge doesn't play out every single quarter. Over the course of a year, 3 years, 5 years, your edge will play out. But sometimes players just get lucky and you have times when you have to make larger than expected payouts. The company also announced that in June, they launched their first Asian studio. They partnered with Hasbro to bring Monopoly to their games. They're also launching in Rhode Island here with Bally's Corporation. We already got that news a couple of weeks back. And all in all, the management team came out and said, while they're not satisfied with their financial development in the first half of 2024, they are very satisfied with how they've addressed these challenges. And look, the market really does like what they're seeing. You can see the stock is up 6.6%. In fact, 7%, close to 7.5% now. The market loves everything they saw. And to be honest, this probably marks the trough in earnings. And I think we're going to see earnings reaccelerate, particularly in Europe and Asia from here. Now, we did see net revenues grew 3.1%. Just for context, right? The expectation was actually for net revenues for this quarter to decline. So for us to actually see growth is very, very solid. Big reason why the stock was up. Now you can see here that total operating expenses was up 10%, and that's just because of a higher expense mix as it pertains to what's happened in the Georgia studio. I talk about that in my Evolution video before that. And as a result, you're going to see profit before tax decline 7.2%. But because of share buybacks, earnings per share only declined about 3%. Now, looking at the revenue on a more granular fashion, now Europe is one of their biggest segments along with Asia. When Europe declines, it's really going to hit the revenue growth for the quarter. And that is why we only saw low single-digit revenue growth for the quarter. And that's because Europe actually fell 5.7% from the same time period last year. Asia grew 4% sequentially to 209 million and actually 4% year over year as well, as you can see. And it was actually an acceleration from the same quarter last year. Look at North America, 74 million in revenue for the quarter, 23% growth, sequentially grew as well as grew quarter over quarter. Latin America, South America only grew 1.6%, but the second quarter tends to be very, very weak. And I think we should see some of these double-digit gains continue, especially as the Brazil studio opens up. And then we saw 17% growth here in the other section. So that includes stuff like Africa and a couple of other smaller countries. Total revenue grew 3.1% at 524 million. The share of regulated market revenue is 44%. Revenue from regulated markets is 231 million. And revenue from regulated markets actually grew 16.2% year over year. Very, very strong stuff. If we actually go back to this chart right here, you can see that revenue is broken down into two segments, live casino and RNG. Now, live actually grew ever so slightly, about 5%. RNG actually grew 0.3% due to that massive payout. You could see here, 70.3 to 70.5, barely any growth right there. And that resulted in that total growth rate, as you can see. And guys, Evolution has this index called the Game Rounds Index, right? Which essentially just measures activity in Evolution's network. And we hit a new all-time high for the GRI at 386. That's 2.7% year-over-year growth. It doesn't correspond with revenue directly, but it is a good barometer for it. And this is exactly what you want to see. And expect that to continue, especially with the new studio builds being opened. And a big contributor to this was live game shows. Now, looking ahead at guidance, the management team doesn't give a dollar figure for guidance, but they did guide for margins of 66 to 68%, which remains full speed ahead. In other words, they will likely get there. Their product leap years continues. They opened up studios in Brazil and the Philippines. With regards to capital allocation, they're looking at 115 capex for the year. They aim to pay out 50% of net profit as a dividend, and then they do $500 million in share repurchases every single year. And that is for 2025, by the way. And for the remainder of 2025, the company is looking at doing $500 million worth of share repurchases, which is about 4% of the total stock. And guys, look, it wasn't a great quarter, but it was a quarter better than expected. And I think this is the trough for Evolution. I think we could get another similar quarter in Q3, and then we continue to see growth in Q4 into Q1 2026. And ultimately, Evolution is a long-term hold, 5-10 years down the track. The thesis is very, very simple. When we look at the European markets and the Asian markets, we're looking at growing at about 7.4% into 2029, right? So you have these two big markets growing at a very steady pace, and you should see earnings roughly grow. And the total addressable market will go from about 172 to 230 billion. At the same time, ultimately, the thesis to play out is here in the US. Only 6 or 7 states have actually legalized live casino because they have to make it legal on a state-by-state basis. And the US does about $74 million in revenue per quarter. And ultimately, the thesis is stuff like New York, California, Nevada, Las Vegas. These states are going to legalize live casino. And when they do, you're going to see revenue absolutely boom. And Evolution last year did 209 in US revenue. I think by 2035, this can be close to $2.5 billion if all of these states legalize, or if like 45 of these states legalize. If you look at sports betting, right, about 47 states have legalized sports betting in the US. And over a 10-year time span, you did see sports betting grow at about a 10x pace. And that is ultimately the thesis. Steady growth, in regions such as Europe, exponential growth in regions such as the US, Brazil, the other markets in Africa, and that is going to see revenue and earnings exponentially grow in the future. But you do have to deal with the headwinds right now. But where does that leave us with valuation for Evolution during this quarter? It's very, very cheap in my opinion. Now, the company is so profitable. I mean, look at this, guys. The company did nearly $2.1 billion in revenue, right? And the EBITDA margin is 66%. In fact, the free cash flow margin for this company is about 61%. So extremely profitable. Now you're looking at growth of about 6 to 7% through 2029. You're looking at about 3.1 billion. Now this is consensus estimates. I think there's going to be major upside, especially as we get legalization in New York, California, Nevada, particularly the US. The US will eventually be the biggest segment by a lot as the years go on. We just need time for that legalization process to go through. Now, looking at a 61% EBITDA margin in 2029, you're looking at about $1.9 billion in EBITDA. Now convert that from Euro to USD. And all we're using is a 12 times EV to EBITDA. A company with 61% EBITDA margins should probably be trading at closer to 20, but we're going to use 12. Got the enterprise value right there. Subtract the net debt, divide by shares outstanding, which is decreasing sequentially by 3% every single year. And then the stock price in 2029 should roughly be about $157, which would represent a 16.8% compounded annual return. The current price is $84, and that includes a hefty 3.66% dividend yield. And fair value right now is $89. But I do think there's significant upside to this multiple. I think you could really look at like a 15, 16, 17 times multiple, and then you're looking at close to 25% compounded annual returns for this name, for Evolution, over the very long term. In the year and now, the stock is popping 6%. So when the stock opens, this is actually the ADR EVVTY. Stock's going to roughly open around about right here. Okay, this is the weekly chart. If we can then see an open to this level, a pullback right here, and we can find support at these levels, we can then look to move onward and upward and go ahead and retake the $100 mark. I see that happening if we can break above and hold this sort of like $80 region right here. If that is the case, $100 is on the table, and we can then target like $90, 95, 100, 103. Guys, very good quarter here from Evolution. They're getting things resolved. Let's continue this momentum. I may add to my position. If I do, I'll let you know on Twitter. But thank you all for watching. If you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.